Hey, this is Justin with DayTradeTheMarkets.com. It's Thursday, August 17th. We had a pretty strong trend day down today in the S&P. The S&P was down about 1.5%. I mean, you can really see that on a daily chart how it really stands out. Pretty strong down day today in the S&P. So obviously, these are the type of days that you can really capitalize on if you are able to identify it, and ideally if you can identify it early. So I wanted to talk about two different ways that we teach for identifying potential trend days, and then talk about two different ways to enter them. So before I do that, let me kind of define what we have here on our screen. You can see these big areas, these big blue drawn out areas here are what we call zones, and these are bigger picture areas of support and resistance that we know about before the market opens. So we have these drawn out before the market opens every day, and we want to see how the market reacts around those. That's giving us one piece of information, kind of on an intermediate or a little bit bigger picture time frame. And then you can see here, these are drawn in red, these boxes throughout the day. Okay, these are short-term market information. They're telling us the short-term auction information. These are developing as the day unfolds. Okay, so ahead of the time we have these blue zones laid out. As the day unfolds, we have these boxes that we form. Okay, and so these are two different pieces of evidence or two different pieces of information, and I want to talk about on each of what I call these levels. I want to talk about how to identify potential trend day on each of these individually, and then obviously it's even more powerful when they come together and they're both showing you the same piece of information. So with that said, let me clean up the chart, get rid of the zones, and just let's look at the boxes first. So let me pause the video and show you that. So now all we're showing, we're not looking at the zones, we've just isolated the boxes, okay? So these are developing as the day unfolds. And you can see, I mean, obviously in hindsight, you can see that these boxes are just continually moving down. It's what I call stacking selling boxes. But the first thing we want to look for a potential trend day, in this case down, we want to look for a couple things. Number one, we want to look for what we call extreme selling aggression. We have these magenta bars that are extreme selling aggression. Typically, not all, extreme bars turn into trends, but you'll rarely have enough energy or enough power in a day to form a trend type of a day unless you have extreme aggression. So that's the first thing. But more importantly, just on this box level, when we start to stack boxes, in other words, as soon as this second box forms, okay, which formed at about right here, okay, at that moment in time, that's our first clue that, we assume as soon as we start stacking boxes that a trend day is underway, okay? Doesn't mean it always will be. Of course, there's sometimes going to fail, but it's a pretty good clue. Even more so once we see the third box that stacks, okay? Once we get that third stacking box, it tells you you better be very careful trying to go against that. You better not try to be a hero and try to pick off the low of the day. This thing is trending until conditions change, and we have different ways of identifying that. But this market's trending. Then we get the fourth stacking box, the fifth one, the sixth one. It just tells you that this market it's just in a trend, okay? So that's the first way to identify a trend, is that what we call stacking boxes. In this case, stacking selling boxes, okay? That's telling us that sellers are in control until otherwise noticed, and that what we want to do is we want to find a way to get on board to the short side. We want to potentially be a little more aggressive, and we want to try to hold on as long as we possibly can, because it's a potential trend type of a day, okay? So that's the first way to identify a trend, okay? Now I want to talk about a way to enter, okay? And a great way to do this on trend type of days is with what I call, box level trades, but especially the box overlap trade, okay? You can see that right here is the area between where these two boxes overlap, okay? That is an area there where this selling box and this selling box overlap. Anywhere in here is certainly what we call a decision point. And we know that anytime you're entering at a decision point, whether it's here or here, you know pretty quickly if you're wrong. If the market starts to get comfortable above this box, which it never did, then we're wrong. But otherwise, we would expect the market to hold there. So it's a pretty low risk, high reward type of a place to get on board. Here would be the same area here. It never did quite get up to that area, but that's the same concept, that overlap area. This one, again, it's sort of an overlap. It's not quite, but we never did quite get up to there. Okay, that's pretty close, but we never did quite get up to there. Okay, here's another one where we certainly got in there very nicely right there on that box overlap. Okay, and so that one would certainly be a pretty nice one. Here's another one right here. Let me actually make it look at like this. It just stands out a little bit better. But those are box overlap areas. Now, certainly you can also do what we would call a breakout trade, where if you're really convinced it's a trend day, and certainly, by the third and fourth box, when we break out of one of these boxes, if we do it especially on some powerful bars, not a bad idea for a breakout, okay? This one didn't quite pan out right away, but certainly the rest of these would be options for breakout trades. Once you've identified that the market is in a trend type of a situation, if we break out, that's pretty good. So again, the first way to identify a potential trade is on the box level when we start to stack. And a really good way to get on board trend type of a days that are low risk. In other words, we're not always going to be right, but when we're wrong, it's pretty minimal risk, and when we're right, we can get paid off on it. Are these box overlap trades? Again, this one would have been beautiful. This one didn't get up there. This one didn't get up there. This one would have been beautiful. This one would have been beautiful. Okay, so hopefully you get the idea there. So that's the first way that I wanted to talk about it. Now what I want to do, I'm going to pause it. I'm going to put the zones back on there, and I'm going to talk about that as well. So now I want to talk about the market on more of the zone level. So just for a moment, try to forget the boxes for a second. Just look at these big blue zones, okay? The idea here is that when we have one of these zones, when we, test the high of it, it should offer some support, okay? But if which it did to a bit, but if sellers are strong enough to get back inside of this zone, it should offer resistance if we test back there, and it should make it down to here, which it did over here. And if we make it below there, then it should come back up to here. And then it should find resistance there. It should make it down to the next zone. Okay, once it makes it there, potentially we'll get some support there. Now, against this kind of a trend, it's unlikely, but we could potentially get some support there. Once we get inside it, then we should test back up there, and we should make it down to there. Okay, so that's the idea of the zones. And so a couple things that we can identify in terms of potential trend day is one, that when we get back inside of this zone, doesn't necessarily mean there's a trend day. It shows that the bears are pretty strong, that they were able to get back inside of this zone. Now, when we get that in here, combined with the second stacking selling box, now we've got a pretty good idea that there's a trend. It's especially exacerbated here when we break from this zone, okay, and get below the zone. It takes a lot of energy to start above a zone, get into it, get all the way through it, and then get below it. That tells you there's a lot of selling in the market, and this thing is, we're in a trend type of a situation. So that's another way to identify a trend, is that if on the zone level, either the buyers or in this case the sellers are showing a lot of strength. So in other words, if we, again, so the sellers are strong enough to break through here, that's bearish. They're strong enough to break through here, that's bearish. They're strong enough to break through here, that's bearish, okay? So, again, pretty good clues that a trend day is afoot when we have that. Again, when you put those two together, where we have strong selling on the zone level and we have these stacking selling boxes, now you've really got something. Especially right here as we break from the zone and we get another selling box, okay? So how is another way to enter? Well, just exactly like I was talking about before, we have the idea that when we are strong enough to break in here and get back into the zone, it should hold if we retest this area here. So that's one place to certainly get on board. Now, we don't know there's a trend yet, but it's certainly a good place to get on board. Same thing here. Once we break below it, either on a breakout type of a trade or on a retest back to that area, we know that's a pretty good place to get on board. Once we get into here and gain acceptance, we know that if it comes back up here, which it never did quite get there, that's a pretty good place to get short. So again, when you put all those pieces together, you have a pretty good story for the day. Is it 100%? No. Is it going to work every single time? No. But it's a way that is repeatable, that you can use to make sense of the market. So I hope that makes sense. If you have any questions about that, let me know. Hopefully you were able to take advantage of some of the good opportunity today, and we'll talk soon. Thanks so much.